Yeah, Tuesday. What's up, everybody? Tuesday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. I hope everybody had a great trading day yesterday, as it was a busy trading day yesterday when we saw a couple of different trade ideas and opportunities occur from our daily market commentary, and I want to speak on a lot of those today. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell so you get the alerts and the updates as we put this thing out every single day. Now, one of the things I want to point out in our daily market commentary that I think is important for everybody to realize. Yes, I put the daily market commentary out early in the morning, and then the trades happen throughout the day. But it doesn't mean that I just set it and forget it and let it go the whole day. One of the things that we do is we do update the trades throughout the day at Traders Army. So I want to just share with you real quick what those updates look like, because I think it's important because we're going to talk a little bit about them today. And so these are our trade updates, and these trade updates come out every day, and we put a timestamp on when we do the updates. Like, for example, NQ Trade has moved up nicely from its good opportunity to either take profits at the end of the day or at least move the stop up to 97.95 to lock in some profit, right? That was our trade alert at 1:15 Central yesterday. Our 6B trade has moved up and is stalling near the end of the day, so it makes sense to take some money off the table if you've not already done so, or at least move your stop up to 1.268 to lock in some profits. And then also we had some losses, right? 6E supply level was broken for a small stop out relative to the reward offered. So the reason that we have this is because as we go through the day, you're going to notice that we talk a lot about what are some of the management tools that we use when identifying our trades. So let's go ahead and look at them today, and I want to kind of cover some of those. So in the ES yesterday, at the end of the day, we did get our breakout. So it waited all day for this breakout, and then it moved about 20 points off of the breakout. So if you grabbed the breakout, you got about 20 points. Well, then it just stalled. Just completely stalled in the Globex. And when you stall in the Globex like that, that tells you I need to take my money off the table. So if you use the 6-candle rule, 1, 2, 3, 4, 5, at the 6-candle rule, the market hadn't really gone anywhere, telling you, okay, either move your stop to break even or close that position for about a 9-point profit. So that was a nice little trade, moved for a nice little profit. We do still have a potential breakdown below 31.81, as I still believe that this 31.38 is a pretty good demand area, and that becomes a good little target. But I need to get basing in here before the level. If we happen to break down this morning below there, then I'll look for a reversal area somewhere up in here. Looking at the Russell, in our Russell trade, very similar to the S&P, where we broke out, but then we had 1, 2, 3, 4, 5, 6 candles later. Absolutely nothing had happened. The Russell actually didn't move as much as the other markets yesterday. Matter of fact, the Dow was the market that was up the most yesterday. The Russell was the one that was up the least. And that tells us that we could actually see a little bit of flow the other way in our funds. So now price has come back down to that potential breakdown area. We've gotten a little bit of base here above it. So from here, I think there's a good chance for price to make it down to around 1480 in that basing. If you don't take the breakdown, which right now the breakdown, there's no reason to be in the breakdown as of yet. I don't have the clear basing. We did have a nice little overnight wick over wick supply level here where we could see a reversal. Moving to the NASDAQ. So in our NASDAQ position, yesterday our NASDAQ hit our reversal trade right here, and we got a really nice move off of that zone. That was that update that I talked about, taking our stop and moving it up. Now, we traded more than halfway into the zone. So our rules at Traders Army say if we trade more than halfway into the zone, then we cannot use that zone a second time. We do have a wick over wick supply level right here that price is reverting up to, where I may see a bit of a reversal there, but understand that if I take that reversal, that has to be a confirmation short, because my big picture is still to the upside. So hopefully I'll get this video out in time for you to see if that level works on that confirmation short. I don't know that that's a great use of your capital, frankly, in the context of an upward trend, but at least wanted to show that as an opportunity out there. Next would be the crude oil market. So looking at our crude oil markets, now we were analyzing the September contract, and in that September contract, we had basing here before the level which then we moved away and a little bit more basing, and that creates the kiss of death. Now, why did I leave this line on the chart? Because I think that this now becomes a better reversal point in the future. And the reason it's a better reversal point in the future is this little wick over wick area here, right there, that wick over wick, I think could act as a flip area where we could see price reverse from here and come back down. So if you're not comfortable with that zone, use a candle to candle style. Wait for price to come into here and then wait for that candle to print and then go candle to candle below there. But I think that's a decent opportunity. In gold, yesterday we did get a little move off of our hourly level in gold here at the end of the day as we came into that zone, got a little bit of a move away. And then on the European market open, we just shot right up in gold. And you're going to see this in all of our currencies as well, as our currencies also took a turn the other direction right at that European market open. So I think that, as we're kind of coming back up on our 4-hour chart, we're seeing a little bit of momentum back up to this upside here. And which, by the way, I know for those of you that have the iron condor on that we've talked about is probably pretty good because your bottom level of that iron condor was in this region down here. So you should be able to close that bottom part out here for your profit level here real soon. And then looking here at this on the 1-hour time frame, I just don't see a lot of great quality supply areas to get short until we come a bit higher. And so even if I go down to a 15-minute time frame, from a demand standpoint, I don't have quality demand standpoint either, aside from this area down here. So I will mark that one off as a potential location. Next, let's look at bonds and currency markets. So in our ZN, price came into our supply level, and let's go to my 15-minute chart because it came in at our 15-minute level. Notice we were basing before the level. So that may have told you, okay, this trade isn't worth taking. If you took it anyway, 1, 2, 3, 4, 5, 6 candles later, price had gone nowhere, telling me, okay, take my stop, move it to break even. And that's exactly the trade that occurred. And it gave you an opportunity to get back out of the position. Now, that same area right here could stand for a reversal back to the upside, although getting a little bit of basing in front of it. But look for a reversal, a little bit of a flip here. We're looking at a couple of flip levels today and why those are important. Next, in the Aussie. So in our Aussie position, we had this little area right in there for a potential breakout. We popped there 1, 2, 3, 4, 5, 6 candles later. We had gone essentially nowhere. Same thing applies on here. This is where our 6 candle rule comes in. And then we just sold off hard. So in selling off pretty hard in the overnights, we put in 2 levels. We put in this one right here and then this little wick over wick right in here. Now the wick over wick right here is a bit imbalanced, but it is right there at the European market open. So that might make it a little bit more quality of a level, a little bit more choice level. For now, I actually am going to leave the one up here as a better one because it's the better structure with a stronger move away. In the euro, this is the euro trade I talked about where we had a little stop out, and that was a very small stop out on the 15-minute chart relative to the risk or relative to the reward that it was providing. And then we got a little bounce off of our confirmation level, and we're getting a little move away from that. It traded a bit below, but not to where our stop would be. Because remember, our stop would have to be below this green candle's wick at the tightest. And so it is giving us a little bit of a move off of there. So if you took that long, you're getting a little bit of a bounce off of it. But on our 4-hour, our trend is still up, but we are seeing a fair amount of weakness. And I wouldn't be surprised to see us pull back into this 12206 area right down in here. Oops, not the daily. I want to go to a 15-minute. And so on the 15-minute, that would put us, at a little bit of a better level. This demand area down here is probably the one that makes the most sense. You do have this area right in here where we could see price kind of give us a bit of a reversal going forward. wrap my lines around that zone. All right. Next, Canadian dollar. So in our Canadian dollar, once again, this is one that we talked about price moving sideways 1, 2, 3, 4, 5, 6 candles later. We hadn't really gone anywhere. And in our update, we talked about, 6C has gone nowhere, but it's in the profitable area. So the perfect time to move your stop to break even and lock in a free trade stop. That's exactly what we do. And the reason for that is because it didn't hold up in the Globex sessions. So, I'm okay giving up commission when I save myself on a losing trade, right? I'm giving up the commission to save myself on a losing trade. I think that makes a whole lot of sense. Let's look at the pound and the yen. So in our Great British Pound as well as our Japanese yen position. Now, when I look at those markets, the pound worked out really well yesterday, but we took our stop and we moved it up to lock in some of those profits. And so our pound reversal off this drop-based rally worked really, really well for a very nice movement out of that level. We've come back down into it a second time and actually now traded to the bottom of it. So I believe there's actually a possibility that we're going to see a breakdown off of this level now that we've hit it a couple of times. So look for this to now be a potential breakdown point as we're seeing some reversal weakness in here. So I think that works really well with a first target down here at this 15-minute level. And then the yen, this was our second stop out yesterday as we came into our supply level and just blew right the heck through that one. And then we came to our second supply level and we've gotten a move away. 1, 2, 3, 4, 5. 1, 2, 3, 4. We're on our fifth candle. So if this candle prints and we get one more that prints that price hasn't really started to move down, then we're going to take our stop and move it to break even. That's the way the 6 candle rule works. Remember, the idea of the 6 candle rule is if on your entry time frame price hasn't started to make your move in 6 candles, it's probably not going to make that move, and it's time to get out of Dodge. And that's what we're looking at in this one at the moment. So if you guys have any questions, as always, send us an email, support@tradersarmy.com. For you Traders Army members, remember today at 10 a.m. Central, we have a live trading room hosted by Corey Lane, where Corey's going to talk about some bigger picture trading opportunities on larger time frames for you that are more swing and position trader style. So hope you guys have a great day. I will talk to you soon. See ya.